Hey everyone, and welcome back for another deep dive. Today we're going to be wading into Forex trading.
Specifically minor currency pairs.
Okay.
You sent over some really fascinating info on this, and
I have to admit, the more I read, the more curious I get.
yeah,
I mean, most people have at least heard of Forex, right?
trillions of dollars changing hands every single day.
Mind-boggling.
It's mind-boggling. But to a lot of us, it feels like this whole other universe.
It definitely is a complex world.
And, but that's what makes these deep dives so exciting, right?
You get to unpack these intricate systems and make them accessible.
Exactly. And you've picked a particularly interesting niche.
With minor currency pairs. I feel like as soon as we start talking about anything,
Beyond dollars, euros, or yen, things get a little mysterious.
All right.
So first things first, what exactly are minor currency pairs? And how are they different from the majors we hear about all the time?
well, it's all about the US dollar.
Well, kind of.
Every Forex trade involves a pair of currencies.
One being exchanged for another?
Think of it like that trip you took to Europe.
Okay.
You traded your dollars for euros, right?
Right.
That's a currency pair in action.
Now, major pairs always include the US dollar on one side of that trade.
Minors, on the other hand, don't.
Instead, you'll see currencies like the euro, the Japanese yen, or the British pound.
Paired with each other, or even with currencies from emerging economies.
So, for example, a euro-yen pairing would be considered a minor pair.
Even though those were both pretty major global currencies.
You got it. It's not about the individual currency's global clout.
But rather the absence of the US dollar that makes it a minor pair.
Okay, that makes
Yeah.
sense.
But it begs the question, why trade these minors at all?
If the US dollar is considered, the big dog,
What's the appeal of venturing into these other pairings?
that's where things get interesting. You see, there's this statistic that gets thrown around in the trading world.
73% of retail investor accounts lose money trading certain financial instruments.
Really?
Now, while this isn't directly comparing majors to minors,
It does highlight a crucial point. Bigger isn't always better.
and in Forex, understanding the nuances of different pairs, like their risk and reward dynamics.
Can be a game changer.
I see where you're going with
So
it.
you're suggesting that minors, because they don't involve the US dollar?
Might actually present a different kind of risk-reward scenario compared to major pairs.
Exactly.
And understanding this difference is crucial for making informed trading decisions.
For instance, major pairs tend to be highly liquid.
Because of the sheer volume of US dollar trades happening constantly.
Right.
This means you can easily buy or sell without drastically affecting the price.
But high liquidity can also mean higher volatility.
Those prices can swing more dramatically in a short period.
Okay, so more like a speedboat on choppy water.
Easy to maneuver, but you're in for a potentially wild ride.
That's a great analogy.
Now, minor pairs, with their potentially lower trading volumes,
Might offer smoother price movements.
think of it like sailing a larger ship.
It might not turn as quickly, but it's also less impacted by smaller waves.
This isn't to say that minors are always less risky.
But it does suggest that the risk-reward dynamics can be very different.
So instead of just chasing the big dog,
Understanding these nuances might actually lead to smarter, more strategic trades.
this is already blowing my mind.
But I'm also realizing we need to dig deeper into what actually drives
Those price movements in minor pairs.
what makes those ships sail in a particular direction.
What should our listener be paying attention to?
Well, you hit on a crucial point,
There are a bunch of factors at play.
and some of them might surprise you.
Well,
Your source material actually highlighted a few key ones.
things like economic announcements, geopolitical events,
And even global weather patterns can all influence currency values.
weather. Now that's what I call a curveball.
Okay, I'm officially hooked. Let's unpack these influencing factors.
Tell me more.
All right, let's start with economic announcements.
Okay.
These can be anything from interest rate decisions by central banks.
To reports on a country's GDP or employment numbers?
So, for example, if a country's central bank decides to raise interest rates
What kind of ripple effect would that have on its currency's value?
within a minor pair,
Well, higher interest rates.
often attract foreign investment.
Because investors are seeking better returns,
Right.
that increased demand for the currency usually leads to a rise in its value.
Remember the euro-yen pair we talked about earlier?
Yeah.
If the European Central Bank hikes interest rates.
We might see the euro strengthen against the yen.
Okay, that makes sense.
It's all about supply and demand
Exactly.
on a global scale.
Now, what about geopolitical events?
Those always seem to throw a wrench in the works.
They do.
Remember back in 2016?
When the UK voted to leave the European Union,
Uh-huh.
that whole Brexit saga?
How could I forget? It
Yeah.
dominated the headlines for months.
Exactly. That event, with all its uncertainties,
surrounding trade deals and economic stability.
created huge volatility in the British pound.
Yeah.
We saw some dramatic swings in its value against other currencies.
Especially the euro.
It's like everyone's trying to anticipate the long-term impacts
Right.
and adjust their trading strategies accordingly.
It makes you realize how interconnected everything is.
Yeah,
But okay, I have to bring us back to the weather example.
that one really threw me for a loop.
Okay.
What's the connection there?
Let's say there's a massive heat wave in Brazil.
And it severely damages their coffee crops.
Okay.
Brazil is the world's largest coffee producer.
So this isn't just about a weather event.
It has economic consequences,
Right. It could disrupt their coffee exports
which would impact their economy.
and potentially weaken their currency.
Precisely.
Or imagine a major hurricane disrupting oil production in the Gulf of Mexico.
Yeah,
That would send ripples through global energy markets,
and likely impact the currencies of oil-producing countries.
even if those countries are paired up in a minor pair.
This is all starting to paint a much clearer picture.
So whether it's a central bank decision, a political shakeup, or even extreme weather.
These events can all create ripples that impact the delicate balance of currency values.
Yeah.
But how on earth can traders keep up with all these factors?
It seems almost impossible.
That's the million-dollar question, isn't it?
And it's precisely why having a solid understanding of these influencing factors,
It's crucial for navigating the world of Forex.
whether you're trading majors or minors,
It's not just about picking pairs at random.
but rather understanding the underlying forces that drive their movements.
So we've gone really deep on these minor currency pairs, learned about what they are, what makes them unique, and most importantly, what can make them move. But for our listener who maybe just tuned in for the first time today, what would you say is like the key takeaway here? Why should someone care about these, minor pairs?
I think it's all about opportunity.
Okay.
You see, Forex isn't just about knowing which currencies are big and which ones are small.
Right.
It's about understanding the forces that make all currencies tick.
And sometimes those less obvious pairs, the ones without the US dollar front and center,
Yeah.
those can actually present some really unique opportunities.
So you're saying just because a pair doesn't have the big dog in it?
Doesn't mean it can't be profitable or interesting to trade.
Exactly.
Yeah.
In fact, think of it like this.
Okay.
A trader who's laser focused on the US dollar might miss out on a really good opportunity.
Just because they're not paying attention to, say, the Australian dollar?
And how it's impacted by commodity prices or something like that?
It's like those hidden restaurants you find.
The ones that aren't on all the tourist maps.
Exactly.
They might take a little more effort to find.
But the food is often way better than anything you'd get on the main strip.
Yeah, absolutely. And the same goes for Forex.
The more you know, the more you can spot those hidden gems, those opportunities that others might miss.
And that's what we love about these deep dives.
Right. Always learning new things, always exploring new corners of the market.
Exactly.
Well, on that note, huge thank you, as always, for sharing your expertise with us today.
My pleasure.
And to our listeners, we hope you found this deep dive insightful and maybe even a little bit inspiring.
Remember, the world of Forex is always changing, but with every deep dive we do.
We get one step closer to understanding its complexities and hopefully making some smarter trades along the way. Until next time, happy trading, everyone.